So we've got
Maryam.
two rate decisions coming up this afternoon, ECB, BOE, a policy stand in stark contrast. I'm going to put you on the spot by asking who's right.
Well, Maryam, if you want my opinion, I think that if you're a central bank and you have interest rates practically at zero, as many central banks do today, I think you need to be very gradually nudging interest rates higher when you have the opportunity in order to prevent a buildup of imbalances in the economy over the longer term. On the subject of inflation, although the risks of a wage price spiral or second round effects at the moment don't look to be they look to be rather negligible, the longer you wait to instill a sense of inflation control over economic agents, the more difficult it becomes to control inflation on a medium-term basis. And I would say to you is that if inflation expectations begin to become unanchored, the market rise in interest rates that will follow that will be far more severe than gradual rate increases that any central bank would be delivering. So it's important that they get this under control, and they definitely need to.
It's important for them to get inflation under control.
It's important for them to assert their vigilance to inflation risks, absolutely.
But Will, a lot of people are predicting, 1.5%, something close to 2% interest rate by the end of the year for the Eurozone. Is that enough of a rise to bring inflation under control?
Well, it's not yet clear that inflation is going to be out of control in the euro area. Again, on a medium-term perspective, that is how monetary policy is set. And if you don't want to be left with a situation in 2 to 3 years' time where the central bank was seen as having not done enough to control inflation risk, that will be a very damaging thing to inflation credibility. Also, importantly, Maryam, the thing that I think a lot of pundits and commentators ignore is the fiscal situation in a lot of countries. What environment do you want to be repairing your public finances in? One of low and stable prices, or one of too high or uncomfortably high inflation?
But then I'm thinking that, I guess, government efforts in the Eurozone to bring their deficits down also complicating things for the ECB in terms of raising rates, no? Not
necessarily. I think if there is going to be some economic pain from gradual rate increases, deal with the pain. Better to deal with it gradually than all at once if interest rates have to rise rapidly, or more importantly, Maryam, if market participants do that rise in rates for the central banks because they haven't done enough. In other words, if treasury yields, if government bond yields spike because of unanchored inflation expectations, that will be a more dangerous situation to be in.
What does all this mean then for the euro? Will it keep on rising?
I think at the moment the euro has surpassed my expectations. I think that overall the easiest trend for market participants this year has been to sell the dollar and trade the euro higher on yield advantage. It is possible we may get a balanced message though from Trichet today, so it may take some of the steam out of the euro, but I think the market is gunning for 150 in euro dollar, and it's possible that it could happen soon.
And just a quick one, can't let you go without talking about the pound. Bank of England meeting today as well. Do you expect a weaker pound going forward?
It's possible, and I think ultimately the danger here for the Bank of England is that a persistent weakness in the pound is going to cause complications for their monetary policy stance. So I actually think that the Bank of England may be one of the central banks that's forced into a rate hike later this year because persistent weakness in their currency is causing them basically inflation upsets. So it's something I think that definitely needs to bear watching.
Stephen Gallo, thanks very much.
Thank you.